VoloFin, which is a Singapore-headquartered supply chain of financing startup, secured $50 million in fresh funding round from one of the top 5 US-based global banks. Roshan Shah is now joining in. He's the co-founder and CEO. Thanks so much for taking time out. To begin with, how are you looking to scale your operations and bolster your expansion with this fundraise?
Thanks, Avan, first of all, for having me here. Pleasure speaking with you. This 50 million funding that we have raised, it's with one of the top 5 global banks. Unfortunately, we cannot be taking the name due to the non-disclosures agreement, but I can share with you it's a very well-known name and amongst the top 5 global banks, and they have a global presence. And where we will be using these funds is further strengthening and deepening our client base in India, particularly for the exporters that we are offering the export factoring.
So I understand that this is one of the first steps in making the company a $150 million line in funding over the next 2 to 3 years. Can you tell us more?
So this is a line that we have set up. So it's a structure that we have put in place where we are starting off with a $50 million facility, of which the part of first tranche is already received, and we have started using that in favor and benefit for our clients. And our idea is to grow this to $150 million within the next 2 to 3 years. And it is a starting off, it's a good start with 50 million that we've done.
So how exactly is it working in terms of being a fintech platform? What is it that you guys are doing? And can you share more details on how exactly it works?
So I'll take a couple of minutes to explain what we are doing and where we sit within the landscape and how important we as a fintech are for the entire the space in which we are working. So VoloFin, we are a fintech startup, and we have offices in India, US, and Singapore. Our key main market is India, where we are primarily supporting the exporters for their factoring. Factoring in simple terms or in layman terms, if I were to say, is where we are buying off the receivables from exporters' book. So when exporters today, they make an export, they get their payments after a 60-day, 90-day, and their cash, their money is always in trap for this working capital. Where we are coming in, we are buying off their receivables on day one. They get the instant liquidity at hand. We do not take any collateral from the exporters. We come in at a very competitive pricing. Plus, the immediate cash can help them grow their business, get more orders, more raw materials, expand their production capacity, plants, etc. And we have seen that happening over the last few years that we have been working. We have seen our exporters grow their business. So this comes in where the exporters can avail this financing. We are already in multiple cities in India with our head office in Mumbai. We have office in Ahmedabad, Hyderabad, Delhi, and soon we will be opening up our office in Coimbatore. So this is where we are going to use our more funds in and benefiting the exporters particularly. And key market, of course, remains India. And we will be slowly expanding into other geographies and getting our foot stronger into US and Singapore, where we are already present.
So a quick take then on financially how you're doing in terms of what your growth targets are and your current performance.
So as of today, we are inching towards breaking even. So in another 6 to 8 months is where we will be breaking even with our numbers and with certain volumes that are already planned and which is already underway. In terms of equity, so far we haven't raised. So we are the only platform, you can say, which is self-funded, and we have reached this stage and we have availed and got this facility even without any external equity at hand. But now with all the ingredients in place where we have a very strong tech, we've got a very strong team, very strong infrastructure, the funding line, and partnership with multiple banks available, we would be going in for raising our equity as well now.
If you like this video, then like, share and subscribe to ET Now.